Hello, and welcome to In the DeNovo. I'm Will Grace, founder and managing director here at DeNovo Treasury, where we empower leaders of community financial institutions entering commercial and industrial banking with expertise for their strategic investment in treasury management products and services. We prioritize the how over the what. We believe in a collaborative journey and go beyond traditional services by actively transferring treasury management expertise to our clients. Thank you for joining us and staying in the know within the DeNovo. Hello, and welcome to episode 8 of In the DeNovo. I'm your host, Will Grace, founder and managing director of DeNovo Treasury. And today I'm joined by Steve Leford, a retired payments expert and self-described payments nerd. Steve has had a lengthy career in the payments industry with experiences at organizations like Global Concepts and McKinsey. Most recently, Steve was Senior Vice President of Products and Strategy at the Clearinghouse, where he led the development of the real-time payments strategy at the Clearinghouse and the real-time payments network. I like to refer to Steve as the godfather of real-time payments. I don't know if this moniker is used widely in payment circles, but Steve's name is certainly synonymous with the launch of RTP in our industry. He's not fully retired, staying active as a board member for organizations like Finsley and Waver. I hope I said that right. And he still attends industry events. It's an honor and a privilege to have Steve here today. And he was the inaugural guest on our program. So Steve, welcome back to In the DeNovo, and thank you for joining us today.
Well, thank you for inviting me back, and I look forward to talking with you again.
Yeah, it's great to reconnect with you. We haven't actually seen each other in person in a while, but we had the opportunity to work together in a number of different ways in the industry. So it's wonderful to have you joining. First, I have to ask, as you've retired, have you taken time to look back on your career and think about the impact of what you were able to accomplish in leading the launch of the first new payment rail in over 40 years?
Yes, I mean, that is something I think about a lot, especially since it's such a current thing to talk about. I mean, we're still going through the process of building up around instant payments, RTP, FedNow, and such. And so it's something that stays top of mind. By the way, you should have said what we launched. I like reminding folks that you were a crucial part of that team that got together where we were planning how we were going to do this thing, if you remember correctly. And
I do remember. Yeah, we spent like 5 consecutive months, I think, in 2015, right? Where we got together. Yeah.
That's exactly right.
At the Grace Building. At the Grace Building.
At the Grace Building. Yes, we named it after you. And
right,
and,
exactly.
But that's an important thing because if I think back anything about going the launch of RTP network, there were a lot of the industry really coalesced around it. It was not just the team developing it at RTP, but there was a group of folks from banks like yourself who were really helping us figure out what to do and how to get this thing to market. The technology vendors really came up, especially those who were going to get folks connected to the network. Industry associations. I mean, it was a broad effort. I've been in payments 40 years. I've never seen that much of the industry just coming together. And to me, that was one of the best things about it, was being able to be part of that overall process and seeing where it's going now. I mean, there's a lot of really cool things being done with instant payments. I guess we'll be talking more about that as we go through the rest of the discussion today.
Yeah, and I guess for our audience's reference, and I guess I don't talk about this as much as I probably should, is that, I was fortunate to be a part of and representing a bank at that time, to be a part of creating the business requirements. And there were probably 25 some banks and probably 40 some plus people, I think, probably in the room, coming in and out during that time, that 4 or 5 month period. And it was incredible to see how the Clearinghouse and you kind of organized and herded the cats, so to speak, to bring those parties together, because you had competing interests in those rooms too. at the time, right? You had Fed there. What was Clear Exchange that then became part of became Zelle, right? And so at that time, you had a lot of competing interests that you were trying to bring together to come up with this common vision, which even though the Fed broke off and eventually, did something different, I mean, the characteristics and, the base of what they do is pretty much what RTP is. It's the same concept, right? Right. So, no, I appreciate that you pull in others when you talk about that, but really, you were the shepherd and you were the one who had to keep that going. So we really appreciate your efforts in that. So thank you. Have you stayed in, how have you stayed involved with our industry during your retirement? Because you are very active still.
I stayed involved. I mean, I'm mostly retired, absolutely, but I stay involved. One of the things I do is I am kind of volunteering, working with the FinTech program at the University of Georgia's Terry School of Business. They have a program where students actually take on projects working with real companies involved in FinTech and banks and such, and doing projects for them. And I help advise the students on that and do a little bit of guest lecturing. As you mentioned, I am on some advisory boards for some companies, FinTech and Waiver, who are doing really good work there. I do a little bit of consulting here and there, but not as much as I used to do. But one other great way of staying involved is I try to spend a lot of time talking with my friends I've made through the years in the industries, folks such as yourself, just about what everyone is doing. I like to say that once you get bitten with the payments bug, it really you really never get over it. So I like being able to stay involved, even if it's more of an observer and a commentator than an active participant.
Yeah, and you give yourself the moniker payments nerd, and we affectionately call ourselves payments nerds or payments geeks. I think I call myself payments geek first before I started. I think they're probably interchangeable, but we all that are catch that bug. That's what we affectionately call ourselves. So yeah, it's I often wonder how my retirement might look and how I might stay involved and if I'll do the same. So it's interesting to see that you're doing that type of work at a university. That must be pretty fulfilling. Very good. Thanks.
Our industry is in good hands with the next generation coming along. I'm very impressed with what I'm seeing. So
that's great. That's great. So looking back now, almost 7 years post-launch of real-time payments. So it'll be 7 years, this November probably, that the first payment went between, what was it, Bank of New York Mellon and who was the other party? It was Bank of New York Mellon and U.S.
Bank.
U.S. Bank, right? Yeah. Yeah. So has the growth met the expectations at the time of your involvement?
I would say growth in terms of the reach, who you can actually make payments to on the network, is probably about what we might have expected. I think that there were a lot of folks saying, we'll be ubiquitous overnight. That was never realistic. And even if you look at things like the history of the ACH, it takes a while to get that breadth. The one area where I don't think we have seen the growth that we all expected is in the actual number of payments. It's growing. I think the last thing I saw from the clearinghouse was growing 15% quarter on quarter, which is an impressive rate of growth. But I think there's so much potential. And I think we were looking at, it growing a little faster in terms of the usage than we were originally expecting. And I think there's a few reasons for that be happy to talk about. But that would be the one thing is I'd like to be seeing more volume going across the network.
What do you think are maybe the top two reasons why maybe that volume isn't hitting where you expected?
Well, the first thing is it's not lack of demand. When you talk to folks, folks in business, when you look at what folks say they want out of consumers want out of their financial institutions. When you look at what some of the fintechs would like to be doing, um, the demand is clearly there. I've seen, surveys saying that, large percentages, large majorities of business have plans to use instant payments over the next few years. I think where we have a gap is in the deployment of products, and it's not easy. In order for folks to actually initiate payments, they have to have products in their hands that they can use to initiate the payments. And we've seen primarily it being used by larger companies and some of the larger fintech companies, typically through APIs, through the treasury management groups of some of the banks. Not always big banks. There are some smaller and mid-sized financial institutions that are actually punching well above their weight. So it's not hard finding business, but you have to invest. And it's not just a single product. You don't just switch on, I want to send payments. The network side is not the hard part. The hard part is every single one of your products, whether it's your corporate, small business, and consumer online applications, whether it's things like your bulk payment initiation, account-to-account payments. I think typically, if you're talking about a mid-size bank or larger, you're going to be dealing with at least 12 different applications that need to be upgraded if you're going to allow your customers to send payments. And typically, that's been done one implementation at a time. It's understandable. You can't do everything at once, but that can take a while. And I think that's one of the things. We still haven't seen a lot of small businesses that have been enabled to send real-time payments, even though there is clearly demand to be able to do that, whether it's for their own P2P payments or payroll or whatever. And consumers don't have a lot of ways of doing it. Obviously, for P2P payments, they're going to be using something such as a Zelle, or maybe outside the banking networks, a Venmo or a Cash App. And those are starting to be enabled with instant payments. But things like bill payments, things like their own account-to-account movements just have not been widely deployed. I believe if we were to put the means in customers' hands, large businesses, small businesses, consumers, and start, really making them know this is something you can do. They have the use cases. They know what they want to do. They want to move their money faster. They want that certainty. It's just they don't necessarily have the tools that they need.
Yeah, I agree. And the financial institutions that I work with are the smaller on the spot. I tend to stay in the 8 billion and under. And
Mm-hmm.
my clients and prospects, interestingly, even though the surveys suggest that there's a demand for this,
Mm-hmm.
tend to share that they don't have a lot of client interest. Now, that doesn't mean that they don't want to move forward with,
Mm-hmm.
They know that there's a little bit, if you build it, they will come with this, and know that the inertia of the industry is going to be carrying this. I think in many of the situations, though, it's that they're not calling on the C&I business right now that would be probably using it. But I think there is a use case for small business. I think we just need to find it. And there's not enough. I don't think there's enough smaller financial institutions that have products out there, as you suggested,
Yeah.
that are catering to those businesses yet.
Or to be honest with you, larger financial institutions, again,
Sure.
they're focused on the large corporate side. That's where the elephants are.
Right.
You can put some numbers on that way.
For sure.
I've got a small business account, and I won't say with whom, but I am not able to initiate real-time payments. I'd love to. And it might also be a matter of asking the right questions. You and I both have experience in the treasury management world.
Sure.
When you're talking to a client, they're not necessarily going to say, "Hey, can you give me RTP network or FedNow or whatever?"
Exactly.
They might say, "I've heard about this thing," but what they're going to say is, "I have a problem. I'm paying my suppliers, but things are getting lost on the way. Sometimes we have to go back and forth to correct exceptions." Things like the certainty. "Oh, by the way, the payment's been made. I can show you how it's paid. Oh, that's where it is." Those kind
Very
of
good
things
point.
make a difference. And that's one thing I mentioned. I'm working with working with some students groups. A number of them have done work on things like, small business accounts payable, how folks, companies want to use real-time payments. And that's the kind of things they're seeing is, you got to talk about what they're trying to do with their business. It's not just, I want to make a payment. And so I think that part of it is you have to be listening to what your customers are saying in a way that you can translate it into, this is how I can fix that problem for you.
That's a very good point. So it's a market problem you're trying to solve, and the customer will feed that to you. You just got to listen for it. So while we're talking about adoption, I think it'd be a good time to talk about your thoughts on request for payment and why there's a seemingly slow adoption of that. And we keep hearing, at least I keep hearing in the industry, it's going to be this coming spring. We're going to see this. I don't know why it's spring. It seems to always be like, this coming spring, we're going to see this huge adoption, or it's going to take off. It seems like it's been, okay, it's this year. No, it's next year. I don't when the next wave is supposed to be, but it seems to be driven by the larger financial institutions, which is the case with a lot of things. What are your thoughts on maybe why there's a slower adoption with that?
Yeah. Well, first of all, I think that just when you said about this spring, it's always this next spring. It reminds me of the old saying about the AFP conference. You announce what you're going to do in October and say you're going to deliver in spring and launch in the spring. And actually have some customers by the end of the year. So, but I think that for one thing, I think we really underestimated as an industry, and I can say from, in my case, underestimated how difficult it would be to launch a request for payment. It was something that was built in right from the very beginning. But first of all, it's not like a bank can do request for payment. You need to have both sides. So in other words, you're launching a new network, just like when we were working on launching the RTP network, you had to make sure there was a lot of folks who could receive them. In this case, you need to make sure that there are a lot of banks that can receive and give their customers the ability to pay those. So it's almost like a network on top of a network. And the idea that, it's just, there's so many things you can do with it. Of course, folks are going to, want to do it. There's definitely always been a good deal of demand from the customer side, especially corporate customers that say, I want to be able to send out a request for payment and get paid back. But you need to deploy it to consumers, to enough of the receive base. And as we mentioned, we haven't penetrated to a large extent all of the payer side who can pay on an RTP. This is a good example of that, and it's one that's a little bit complicated. The banks that need to enable it need to say, how do I know that my customer is going to receive this? If I'm going to go to the work, I want to make sure that they're there. Well, the folks who are wanting to send say, well, how do I know that there's someone to send to? It's a chicken and egg problem, more so than just getting folks to receive request for payment or RTP was. So I think that slowed it down. I think that there's also, you have two different sides of a bank who have to work together, or at least go work toward a common aim. If we want to get request for payment, especially requests for payment for things like retail bill pay and such, the retail bank has to get excited about making this available to their customers. And it rarely makes the top 10 list of projects that they want to work on with all the things that are going on. So, I think that it's one of those things where, especially when you get to bigger banks and even mid-sized banks, retail banking and commercial banking are just different animals and different motivations. And coordinating, it's not just coordinating in your bank. It's like an industry has to do it. So I think that's one of the things that's been holding it back. I think, even if we look at things like B2B payments, and this is where it gets interesting, someone would like to be able to fire out a whole bunch of requests for payment and say, I know everybody at this particular bank can do something with it. But if you think on the commercial side, you typically are enabling folks on one product at a time. Not every single one of your commercial customers uses all of your products. And so maybe they're not they don't have a payables product, and then payables and receivables tying together and all of those kind of things. And so even when you have the product available on the retail side, you can kind of deploy things broadly. The wholesale side, each one is a sale and each customer wants to buy in. So when you send request for payment, you don't necessarily know. It's a much tougher problem than I think we ever imagined it would be. So it doesn't surprise me now that it's taken a while, but man, I would love to see it deployed in a way that folks could really start using it, because I think it's something that works. It's something that makes sense. People would like to be able to do it, both on the paying and the receiving side, but you got to get that deployment out there.
Yeah, and even with the clearinghouse being, a large bank-owned entity, and at that time having all the CEOs buy in. I mean, this was not something that was done in a vacuum. It was all the CEOs that were buying into this, from what I recall. And it's still, and maybe at that time, because you had all the CEO buy-in, we probably didn't think about that there still is this, especially the larger the financial institution, the retail line of business is its own business within the bank. Oh, yeah. The commercial line of business is its own business within the bank. And sometimes those businesses have competing priorities. Well, they do have competing priorities. And to try and get on the roadmaps of both of those and to have those coordinate, and that is a tough thing to do. And if we're now 7 years away from this launch, the players have changed over that time. The momentum has probably changed from the CEO perspective. CEOs have switched out. I don't know if Fifth Thirds has, and that's where I was at the time. So, there's probably been some momentum that is, and probably some focus that has changed as well to try and get this, rolled out. Not that it's not important, but you have to be able to say that it's a strategic priority for each one of those lines of business to be able to get it to work. So It's very valid points that you're making, that probably at the time when we were writing the business requirements, we had the support of, the CEO, and it probably was like, hey, we're going to be able to get anything we want at this point. Because writing checks. They were writing checks.
Yes.
For this development. So very, very good insight into why this is probably taking some time. So anything that you might do differently if you were leading this today, the development of RTP, that you could think of?
Yeah, I'm not sure exactly how one would pull something like this off, but because of the things we just talked about. But I think we put a whole lot of emphasis of getting that receive, foundation in place. Enough financial institutions say, hey, I know I can send this stuff. Didn't put as much emphasis on the sending side. And, I think that my way of thinking was, well, gee, if you have this new thing, folks are going to want to be able to use it. Therefore, folks will implement the products. And there was just more involved, maybe a little bit more attention to getting the vendors that a lot of banks depend on to go ahead and make this part of their plans. I don't know if that were required incentives or whatever, but getting the the send side going, I think, was one of the key things where, I think that wish I knew a good way to have made that move along faster. Obviously, it's tough, but that's the one thing. And I think also in doing that, making sure it was more or encouraging it to be more broadly deployed. I would say especially small business. I think if you look at a big area of untapped potential, it's small businesses as originators. They can do things very quickly. They can turn on a dime and be able to say, okay, I got this new thing. A new button just showed up on my online system. Let me try this thing out and see how it works. I think that again, that side of it might have been, might have been fruitful.
Yeah, very good. So let's maybe we shift a little bit to maybe we kind of talk about instant payments and faster payments kind of as a whole then. And the Fed introduced FedNow last year. What are your
Mm-hmm.
thoughts on its impact on instant and faster payments overall thus far?
Well, I think that FedNow. First of all, let's talk about FedNow's impact on RTP. I would say it's generally been very beneficial. Uh, the first non-RTP owners that joined the RTP network joined after the Fed announced August 2019, I believe it was, that that FedNow was going to be launched. I don't think it was even called FedNow, that they were going to launch a new system.
Yeah.
And all of a sudden, a number of community banks and another non-owner banks started signing up. Interestingly, when the Fed went live in June of 2023, all of a sudden the pace picked up for folks joining RTP as well. And I think right now, depending on which week it is, it looks like they've now reached, in terms of number of financial institutions, they've largely reached parity. You about right around 500 or so, I think, are on each network. I haven't looked in the last few days. And of those, a couple of hundred are on both networks. So what you've seen is not only has Fed gone from 0 to 500 in, just number of months. During that same time, the number of financial institutions on the RTP network have doubled. So I think that's great. I think some of the newer institutions we're seeing come on are now coming on with a bit more of a plan to go quickly from receive only to starting to offer send products. In some cases, more than just one. I think that there's now this feeling, okay, this thing is rolling now. I need to go ahead and get on with it. And so the initial plan, and this is something I'm hearing from a number of banks and credit unions, is I'm going to get on instant payments. My plan is going to be on both FedNow and RTP. That's being made easier for me because kind of now everybody coming on the network, with a very few other exceptions, is coming on through a third party gateway of some sort, a hub, a gateway, someone who is enabling it for it and operating it on a third party. That model seems to work. And so it makes it where if you join one, the connection's already there to the other. You just need to make sure that from a business, paperwork, all the legal stuff point of view, you've covered your bases. So it seems like that. And in fact, I'd say that the 200 overlap number will see catch up quickly as folks who are on one, join one first, go on the other, because that seems to be the pattern. You get on one network, a few months later, you go on the other. But we're seeing more folks who are opening up the ability to send. And I think it's more, say community and mid-sized banks come on who tend to, punch above their weight when it comes to small business. Maybe that'll help open up that small business side some. So I think that's interesting too. I think that the competition is going to be good. I think one area where we'll see that happening is I think we will see the limits on the value of payments that you can send over the network continue to move up. It's right now $1 million on RTP, $500,000 on FedNow. I think we'll start seeing that continue to move up as both of the networks try to get a little bit of competitive advantage and get a little bit more flow through there. Maybe we'll see some interesting things in terms of pricing or some other ways that we'll see competition, features, functionality, probably a little bit of that. So I think overall it's going to be good. Now, I don't think that any of this means magically in a year or so we're going to be reaching ubiquity. It's, you still have to make the decision. You still have to go through everything. Even though we'll see big numbers in terms of numbers of financial institutions that are on the networks, where I think it's going to continue to move up fairly slowly. There's still roughly 10,000 financial institutions in the country. We're still sitting at maybe between the two of them, maybe 700 or so financial institutions. We're still sitting at roughly 70% reach. I think the number of institutions is going to continue to go up faster than the reach, just because the big ones are already connected to one or the other of the networks.
Right. Yeah, you've mentioned something very interesting that I have found very different with this launch versus the launches of the others, which were very, long time ago. With the third party being able to make this very seamless for the
Hmm.
financial institutions, especially the small and mid-sized financial institutions, where
Yeah.
they've taken the decision making out with should I go Fed now or should I go RTP? Um,
Hmm.
for instance, Jack Henry, the switch is very easy. They've
Yeah.
made it very easy to say, well, we can send you one way or the other. And I'm not endorsing, I'm just using an example. But I think about how you don't have the same thing with the ACH network. It's very difficult for a financial institution to make the decision: do I go with EPN or do I go with Fed? Because it's difficult for them technology wise to
Yeah.
they have to do two very different things in order to send those things when it's kind of
Absolutely.
technology wise inside their database, so to speak, to do those things. So very interesting to me that the way that this has been set up, and I guess we've learned as an industry uh, how to make this much more seamless. And the file formats were also, I mean, both networks were very smart about making
Mhm.
sure that they complemented each other.
Yeah. Well, the good thing we found out, and honestly, I don't think we knew this even when we were at the clearinghouse working with the Fed. Kind of sharing ideas about the file formats and things like that, which we did. There are differences between the formats. I think what we found is the third parties have been able to bridge that in a way where we're not losing anything. So you submit to them, I want to make a payment, and it's just a matter of send it this way or send it that way.
Yeah,
Receiving it's translated and posted correctly, regardless of where it came from. So I think
sure.
um, it wasn't obvious that that would be something that the providers could bridge, but they seem to have been able to do it fairly readily.
One of the use cases that seems to have taken off in the last few years is, I believe the term is earn.
Hmm.
It wasn't necessarily on the radar of the use cases when the group was ideating RTP. What are your thoughts on that?
Well, absolutely not. And you were there when we were going through the use
Yeah,
cases, and we had
yeah. Well,
projections.
we think payroll was going to be, a primary driver for RTP for sure, unless it was an urgent payroll. But same day ACH was there.
Yeah, you'll say. And by the way, we do have what I think the latest number I saw was 93% use of direct deposit. So it's kind of like that's done. What can get better than direct deposit? Well, direct
Exactly.
deposit for payday. Okay, so it didn't exist. We didn't, and it's probably about the fastest growing. It may even be the largest single use case of instant payments now. I don't have that view of the statistics anymore, but it's definitely taken off. And so earned wage access, and it's kind of like, well, gee, why is earned wage access taking off so well? Because people like it. If you're an employee, you like being able to get your money. And with the tight labor market, it goes hand in hand. So it's a matter of
Yeah.
the this was right. And so, yeah, we totally missed that. In fact, I would say if you look back at all of the use cases, what we thought would be driving volume and what we thought or maybe even didn't consider, we were just wrong. But that's one of the great things about the payments world is that it doesn't really respond to central planning so much in terms of how people use it. The fact is that there are creative players out there, the end users, some of the providers who come up with ways of using any new tool. I mean, ACH is a good example of that. It was originally designed to take the place of checks to be used for bill pay. That was what its original use case was, and it's used for thousands of things now. And so I think that you know the,
Yeah.
the market forces determine what's going to take off, and there's smart folks out there, way smarter than even that group that we assembled, 40 people in that room in the Grace building, could have ever come up with.
Well, and think about Netflix. That was a subscription mail service that even tried to sell itself to Blockbuster.
Yeah.
And Blockbuster laughed him out of the room. And now there's one Blockbuster in Bend, Oregon. So, and where's Netflix now? That'll just tell you everything you need to know. So, any predictions on the next use case we might see take off? If Steve Ledford's looking in his crystal ball.
First of all, I think we've just shown that I'm not necessarily a great predictor of the future.
Well,
making predictions hard, especially about the future. So,
yeah. Well, you couldn't predict a global pandemic and that Grubhub would come up with a great idea to pay their shift workers, right? And come up with a competitive advantage.
Absolutely. First of all, I think competitive advantage is still going to be one of the main drivers. It's amazing when you feel like you can get a business advantage, what you'll be able to do. I don't think this is going to be one of the big volume drivers, but I think one of the more significant use cases that's already starting to perk up is mortgage loan closing. This is a role where title companies play a big role here, and they conduct an orchestra of payments going in and out. The new lender making a payment, paying off the old lender, paying the commissions to the brokers, insurance, all of these kind of things. And it has to be done with split-second timing. And how many people out in podcast land, raise your hands, have had to sit in a title agent's office saying, we can't quite find where that wire is. Can you hold tight? We're going to call the bank. And so I think they are ready to really take this and run with it, especially now with the higher limits, which makes this more possible than it would have been even a couple of years ago. So I think that's going to be a significant one. I think we're going to see more business to business use as especially in very targeted industry use case. We've already seen some pickup in logistics types industry where timing is so important, but I think it's going to become more and more widespread, and it will be built into things like industry specific applications. I think that embedded nature is going to make it where it becomes just more a matter of fact. I mean, the fact that it's because of that immediate confirmation, it makes it really easy to use with RTP in terms of API-driven development. And this is something I hear from some of the fintechs that I work with is they like RTP because it's so well behaved when you implement it into an application. I think that the biggest potential area is just enabling the kinds of payments that small businesses are enabled to make through, whether it's ACH or whether it's through wire transfers, enabling them to use RTP. I think we could see an explosion of usage just because they know what they want and they can change pretty quickly. It's a few folks who can get together and say, okay, we'll just do it this way. Let's try it out, see how it works. And I think we'll find one as it's enabled, but all of these require enablement. Those are, I think, where we're going to see the big use cases coming up.
Yeah, one of the things I've been trying to coach my smaller financial institutions as I'm taking them through a faster instant payments journey is they have the opportunity. They don't have a huge wire business. Like let's focus on instant payments and see what we can do to move those things and not focus on your wire business because you haven't gone down that path. Let's go down this other path together. So I was thinking about like what might be the next catalyst to help boost adoption of instant and faster payments. And you already kind of mentioned the APIs with with some of the partners that you're working with. Are there other catalysts you might think that will help boost adoption here that are coming up?
Well, one of them I think is just what we talked about earlier, enabling products. And I think making that easier, the catalyst will be when the providers of these third-party payment and AP and AR and bill pay applications start implementing it so that it makes it easier for the banks to pick that up and move with it. I think that's one. One other area where I think, and this is not so much a technical catalyst, but I think it's an area where we might see a whole lot more. Let me this way. I'm hoping we see a whole lot more being retired now. A little bit of self-interest here is in the brokerage, funds management, savings industry. I think it's one where competitive advantage, now that we've, for the last couple of years now, had real interest rates to deal with, folks are more interested in where they're going to put their money. And one of the things that I know there's been research around is that people are more willing to park their money somewhere if they know they can get to it quickly. Uh, now that I'm in the time of my life and I'm doing things like drawing down, IRAs and stuff, I wish that money could show up a little bit faster. That would be really nice. And so,
Yeah.
I think that there are industries which could turn on and make these things happen a little bit faster, which will also make it more relevant to other folks. Again, if you have customers who say, how come my neighbor can get money quicker, I can't? It makes them want to go ahead, call a vendor and say, hey, go ahead and switch me on to this instant payment thing, as well as on the sending side.
That's great. I failed to mention that I had a mortgage closing last year that was settled in RTP last summer by one of the large FIs whose name shall remain anonymous. So so that was very interesting to me when it came over and I saw the description. And I was like, oh, here we go.
Absolutely.
So save me some wire fees for sure.
Okay.
So anything you'd like to add in closing, whether it's industry related RTP or something you have personal or with your business interests coming up?
I think first of all, again, I think we're really starting to see things moving along. I do want to just say again that this payments business, for those of you who might be watching this who are fairly new to payments, or it's now just become part of your responsibilities, it's been the greatest business in the world. I've enjoyed it. It's given me a lot of fun stuff to work on. I'm really impressed with what I see the next generation coming along doing. And if I can make just one general payments prediction, it's that every time I think, well, we've pretty much gotten everything in place, we're where we really need to be. There's not much more going to be happening in payments. I've just been dead wrong. And I think I'm going to now change and say, I think it's going to continue being dynamic and changing. And one of the reasons is payments is just one of the most personal things you do financially. It's something you do every day. And there's no better way of for us in the financial services industry for, I don't know, helping out folks in general than to make it easier for them to move their money around. And so, so all of those out there in the payments business, glad you're out there fighting the good fight and keep on doing it.
Yeah, personally, business, it's a very personal thing for small business, large corp, right? It's the way we move.
Yeah.
This has been extremely informative. Thank you so much. And for DeNovo Treasury and our clients, and our prospects, and our subscribers. And thank you again for joining us today. Thanks for tuning into this episode of In the DeNovo. For more content like the video we shared today, check out our website at DeNovoTreasury.com and our YouTube channel at DeNovo Treasury. Thanks and see you next time.